Hello, chart watchers, and welcome to Market Watchers Live with Erin Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars, follow the link to Market Watchers Live, and play back the show. Each show will be archived until the next show begins, so you'll generally have a couple of days to go back and review the recording. During today's show, please feel free to submit your ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, Erin will provide me stock symbols from those questions, and I'll use your requests in the 10 and 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live airs on Mondays, Wednesdays, and Fridays from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. Bottom right-hand part of your screen, you'll see a area for a survey under How'd We Do. We'd love for you to complete that as you exit the show. Just one question, very quick. We just like to get feedback on what you think of the show. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. We're glad everybody is with us. It is Friday. Happy Friday to everybody. Got a lot going on today, a couple of announcements that I wanted to make. First, next Wednesday, we're going to continue in our long list of great guests, and Bruce Frazier, who is the author of the Wyckoff Power Charting blog here at Stock Charts. He'll be joining us, so mark your calendars for Bruce on Wednesday. And next Friday, I will be doing a segment on reversing candlesticks. So if you're a candlestick fan or you just want to learn more about candlesticks, I think I've got a segment that'll be right up your alley next Friday. Probably spend a half an hour or so going through some really key candlesticks, the different types of candlesticks that you should be watching for. They're very powerful, especially for short-term traders. So definitely join me for that one. And Erin, I know that we've got our archive. You know, we store one of our shows on our site, but our Facebook page, Market Watchers Live Facebook page, actually archives a bunch of them. And I know you're going to go through and show everyone how they can do that in just a couple minutes. But first, welcome to the show. And how are you doing today?
Thank you. And I'm doing pretty good. We're finally starting to cool off here in Southern California. I think our high is only going to be about 92. So I'm pretty happy about that.
Chilly night.
I'm actually looking at a praying mantis right now. I just noticed he's stuck to the screen of my office window. I know. I wonder if that's good luck. I think crickets are supposed to be good luck, but yeah, Friday. Woo! Very happy.
Well, if he's praying for some of those big technology stocks to come through with their earnings, he hit the mother lode, because we got a bunch there that we're going to talk about. But there were some huge earnings reports out last night. The Nasdaq's absolutely soaring today. But we'll get into all that in a little bit. But I'll let you show everyone how they can use Facebook and our Market Watchers Facebook page to go back and review, because we get this question a lot. So if you've been asking how we can go back and look at the archive for longer than just a couple of days, Erin's going to show you how to do that. So I'll let you get started, Erin.
Sure. So all you need to do is like our page on Facebook. If you're not big on Facebook, it's still worth it. Just open an account and like our page, and then look at all of the great things you can get. Of course, I had my thing open. So you can go over here to videos, and you'll see what we're doing right now. Live is going on. But you can see our older shows here that you can get to. So Trading Gaps is still out there. Julius's discussion is still out there. My PMO discussion is out there. So go ahead to Facebook and like Market Watchers Live. You can see right here, you just use the search box, Market Watchers Live, and there you all are. So I know we've had a lot of questions. Well, when we first started this, Tom, you remember we didn't even record these, and we got a lot of people not happy about that. So then we started saving them, you know, the latest show. But then we had people really wanted to have archived versions. And so here you are. You asked for it and you got it. So let me go over the agenda real quick, though, for us, Tom.
All right.
All right. So market updates on the half hour from myself. Talking technically, as Tom said, we've got some very interesting reports and upgrades, downgrades. Then John Hopkins will be joining us from earningsbeats.com to give you his charts he's watching or stalking. 10 and 10 to 1, we're going to take those symbol requests. So start sending them in via Twitter, and you can send them in via the chat box here on live stream. You can send them in on email, but they won't get picked, obviously, until the next show. So just so you know, if you want to do that, you can. And it's Market Watchers at stockcharts.com. The first 10 and 10 to 1, though, I wanted to give you all a teaser, is OXY. So if you wanted to take a look at that chart on your own and take your own personal notes, you can compare what you think about it to what Tom thinks about it. And then I'm going to give you the sentiment update, and I'm going to show you just a few charts also from the decision point indicators. We have some interesting things to note on those that I want to talk to you about. And then we're going to finish with mailbag and wrap up, and we'll see if we can close the show on time. Our producer, like I said, would really like that, but we're not so good at that yet. So anyway, that's pretty much it. So I'm going to go ahead and just move right into the first market update. And here we go. Let me go ahead and make sure this is refreshed. Excuse me. So really interesting. I did write about how the Dow was showing more strength than the other indexes, but it was interesting today because we saw the Dow open much lower, did quickly regain those losses and is now up. But you can see as far as the S&P and the NASDAQ, I mean, most of those opened up or gapped up in the case of the NASDAQ. We can see Wilshire 5000 leading. Treasury yields down somewhat at 24.25, and UUP is up. The dollar is looking great right now. As Tom wrote about, a reverse head and shoulders is executed. Oil is also looking pretty good. You can see the rally is continuing, only on a more steep ascent. So we'll see how long it can hold that particular rising trend. It's pretty steep. But right now, oil also looking really good. Gold is up. It's been consolidating since its opening moves up onto the positive direction. GLD at 120.74 right now. VIX is falling. People are starting to feel a little more comfortable with today's rally versus yesterday's decline and the day before, where we were having some trouble consolidating and moving down. Advances are leading declines. And I'm going to take us very quickly to our member homepage. And as you can see, looking at what's going on today, we have quite a few alerts going on. Of course, the NASDAQ crossed above. It set a new high. You can see the TSX has set a new high. We're also looking at the S&P 500 setting a new all-time high as well. So technology, not surprising to see its BPI close above 80, given the reaction of the NASDAQ today to all of those great earnings. And with that, I'm going to pass it back to you. That completes our first market update.
Okay, appreciate it. Sounds good. And yeah, those numbers are pretty strong today, especially on the NASDAQ. I'm going to go through a couple of things here first before I get into some other charts. I did want to mention that the, actually, I wanted to go back and show the TNX. I'm going to get into a relationship between the 10-year Treasury yield and the S&P 500 in just a few minutes. But I did want to say the initial jobless claims yesterday came in a little bit below expectations, 233,000 versus 235,000. September pending home sales yesterday were flat. Market was expecting a rise of 0.4%. And then this morning, we got the first reading of Q3 GDP. And a lot of folks were thinking, as a result of the hurricanes, the two significant hurricanes that we had, that we may actually see a little bit less GDP than a lot of other folks were expecting. So the consensus estimate was 2.5%, and it actually came in at 3% today. So that was another positive. October consumer sentiment came in just slightly below expectations at 100.7 versus 101. So a little bit lower than expected there. But if you take a look, showing the TNX here, and make sure I got the most recent. Whoops. Let's see here. Okay, so you got the TNX. It's actually down a little bit today, meaning that money's rolling into the bonds. But I'm watching this 240 to 242 area because this was resistance on the yield for several months, and we finally cleared that earlier this week. And now we're simply just going back and retesting that area. So I'm not too concerned about one day's move down in the yield. If we were to drop back down below, say, that rising 20-day moving average, that would be a little bit more concerning for me. But I don't see that happening. I have a feeling we're going to continue to rise. And all of this is pretty interesting because I think it's on Tuesday that the Fed meets again. And I think most are still looking toward the December meeting for a Fed rate hike. I'm still not quite so sure. I think this recent breakout in the yield is telling me that the bond market is beginning to think that, maybe starting to price in another rate hike, possibly as soon as next week. So we'll see. I do think that most would agree that it's going to be December. But I think when you look at some of these charts, I'm not so sure. I think we could be looking at maybe a surprise come next week and a rate hike. We'll have to wait to see what the Fed does. As Erin mentioned earlier, the dollar, pull up the UUP, you'll see that yesterday, the push to the upside. Look at this breakout. This is a reverse head and shoulder. So here's your left shoulder. Here's the neckline. Here's the head. Here's the right side of the neckline, which actually is a little bit higher. So you got an upsloping neckline, which I prefer. Then you come down, you put in the right shoulder, which is slightly higher than the left shoulder. So you've kind of got this upward slant to this bottoming reverse head and shoulder pattern. And I find those to be pretty bullish. And here we did execute with the breakout. You can see that the volume picked up yesterday in the UUP to continue this push to the upside. And we are continuing it again today with another rise of about 0.4% in the dollar. So UUP continuing to move to the upside. And that is generally not good for gold and gold mining stocks. So if we pull up the GLD, you can see that we're hovering down here near gap support and recent price support around 120. Seems to me like as the dollar moves higher, it's probably just a matter of time before we see the GLD break down. And then we would be looking down at the lows somewhere in the 114 to 116 area where we tested from March all the way through July. These were pretty key lows back then. After the breakout, wasn't expecting that we were going to go back down to those levels, but it certainly appears that we could be indeed. If we look at the gold miners, so I'm going to pull up the DJUS PM. I wrote about this in the Don't Ignore This Chart blog yesterday because you can see, actually I'll annotate this. We recently lost price support just at about the same time we were taking out neckline resistance on the dollar. But you can see right here, these last couple of days, we've had big moves. And look at the volume picking up on this index as it breaks down. I don't think this is very good at all. You do have some support where it's trying to bounce based on that reaction low that we saw back in August. But again, I think outside of maybe a push up to 83 and change, I think the next big move is going to be the downside, especially with that dollar breaking out. So I'd be really careful with gold and gold mining shares at this point. It really looks to me like maybe we got that head fake in gold above 1,300, and now we're starting to make that push back down again and resume that longer term downtrend. So I would be really careful with gold at this point. Some of the stronger industries today, I thought we'd go through some of these. The first one to mention, obviously, broadline retailers. Amazon just blew out numbers last night. So you've got the DJUSRB broadline retail index. Look at the spike here after sideways consolidating for about 5 months. I like that. We haven't seen that in all the areas, especially more recently when we had the big push to the upside. We've seen a lot of areas very overbought. And you can see for the most part over the last few months, that has not been the case with the broadline retailers. Amazon's been consolidating for quite some time. And you can see this breakout, a very similar pattern. I'm sure we'll look at it later when John Hopkins joins me. But Amazon having a very good day and looks very similar to this overall chart on the index. Furnishings having a very nice day. And they're doing exactly what I expect in uptrends. You can see as it moves higher, it pulls back, it holds the rising 20-day moving average, it breaks out again, it pulls back, it holds on to price support and that rising 20-day moving average, and now it's moving back higher again. So the furnishings index up a little more than 2% today. Very, very nice action indeed. And now a couple of the obvious ones. Internet stocks. Google, my goodness, their earnings report and the reaction has been so positive. Here you can see the internet stocks, which did actually consolidate for a period of time, a couple of months. Doesn't seem like it because they just continually break to new highs. But we did consolidate for a while, pulled back to the 20-day moving average. Notice on this one, the recent pullback before the Google report, we actually did come right down to price support and reverse. And I'll try and point these out, but you can see that tail coming down off this downtrend below price support and then reverse back up and close above it. That's a doji with a false breakdown. And of course, we've rallied right back up off of that. So that kind of gets into some of the reversing candlestick formations that we'll talk about next Friday in more detail. But right here, you can't really complain about this group at all. This is a great push to the upside, another breakout. It certainly looks like the internet stocks are ready to run some more at this point. Software, another part of technology, very strong today. Microsoft blew out their numbers, and so they are certainly helping to lead software stocks higher. Possibly a shooting star off a pretty significant uptrend, though. So this is a group, while it seems like the internets may just be getting going, this one might be a little bit more, I'm not going to call it an exhaustion gap, because an exhaustion gap you think of as kind of a long-term top. But I do think we could pause for a while if we continue to trade like this on the software index and maybe pull back. Look at the RSI. So you get an RSI that's up in the 80s, mid 80s, and then possibly a shooting star candle off of an uptrend on the heels of great news out of one of the leaders, Microsoft. And it could be setting up maybe for a short-term top. I still love the group further out down the road this year and into next year, but I think that this kind of a candle can put in a short-term top. So we'll wait and see how that finishes the day.
Yeah, I could see that. Sorry, Tom. I could see that as a possible island reversal, especially given that candle right now.
Yeah, especially if we get, well, we need to confirm that, but I agree. If we get a gap down off of that, that would definitely be an island reversal. So we'll be looking. Or it could trade up here for a couple of days, go sideways, and then gap down. Then you have your island cluster reversal.
Exactly.
Both are short-term tops, and worth considering.
Caution.
First Solar came out with some very strong results, and the renewable energy space, you can see the huge move here to the upside after consolidating again for a few months. So nice sideways consolidation. This group was not overbought. And so now I think it's probably starting another move to the upside. It is a volatile group, though. So you do have to be prepared for some pretty wild swings back and forth. But I think overall, the group looks pretty good. A few of the groups that are struggling today, though, I don't want to go without mentioning those. Airlines, after a really strong move earlier in October, you can see we've given up a lot of these October gains, and October is seasonally the best month of the year for the airlines. So this move to the downside has been a lot more than I was expecting. And really, if you're thinking bullishly of this group, you want to see a reversing candle here, because this breakout occurred right at about the 258 to 260 area. And here today, we got down as low as 255. So you really want to see a reversal here and a push back to the upside. The volume on the downside has not been light either. This has been a lot of selling taking place. So airlines, I think, are kind of flashing a caution signal at this point. And unless we reverse later today, I'd be real careful, this group. Tires. Now, this one reacts a lot to Goodyear Tire, and Goodyear was having a rough day, and you can see that the tire is following suit, down over 5% today. So even though we're seeing some really nice action, it's not like everything is going higher. Definitely the tires taking it on the chin. Let's take a look at, I think it's the insurance brokers. This one's kind of interesting to me because I think this weakness is setting up an opportunity. It's been in a nice uptrend, but as it pushed higher, you can see that the volume kind of dwindled. And as we move to these new highs, look at the negative divergence, lower MACD, higher prices. And now we're making a very swift move down. I think a reversal somewhere around the 300 level would actually be a pretty interesting entry into this group, or into potential stocks within this group. So that's something to take a look. And if you're wondering, okay, well, I can't invest in this index, what do I do? Well, if you go into the industry summary under the financials, where you'll find the insurance brokers. Let's see, down here on the bottom, If you click on insurance brokers, if I click over here, I'll get the chart. But if I click on this link, it actually will give me the stocks that make up this index. And you can see there are 4 of them. You can sort them by scooter if you'd like. Here you can see the best one is WLTW. So with the group pulling back, this one's coming back close to its rising 20-day with a very strong MACD. So that one would be kind of interesting. Aon, I think, may have reported, they either reported yesterday after the close or this morning. I want to say it was this morning, but I look at so many. But this is one that with a negative divergence, slight negative divergence, coming back down to its 50-day moving average. A reversing candle at this point down around the 50-day, I think would be very interesting, especially now with the RSI down at 40. Because during uptrends, typically anytime you get this RSI dipping into the 40s, it tends to be a great area for entry. So on the one hand, it's really scary because the volume's been heavy and it's sold off $7 in a couple of days. But if you're going to buy a stock in an uptrend, I think the best time to buy it is when they do pull back to key area of support. So this is kind of what I would do when I'm looking at an index and I see something that looks interesting, that's getting close to an entry point. I know I can't buy the index, but if you go into the industry groups, find the index, and then click on it to go into the individual stocks, then you can find stocks that could rally if, in fact, the index bounces off key support. So that's something to look at. We're going to get into some upgrades and downgrades in just 1 minute, but I wanted to show you a couple charts I thought were really interesting. JD, this is JD.com. Look at this hammer printing. And, we're going to talk again about reversing candles, but off of this downtrend, I really like the candle that this stock is printing. It came down and tested this gap support area, took out this reaction low here, and now is reversing back up. I think this potentially could be a significant bottom on JD.com, so something to keep in mind. And one stock that I'm waiting for, I know we had a discussion the other day on AMD, but this thing has just been awful since they came out with their earnings, and is just another testament why I don't like to hold into earnings. I know you've got the Amazons and you've got the Googles and so forth of the world that are really doing well today after reporting excellent results. But then you've got the other side of the spectrum, and this is the other side, Advanced Micro Devices, which I liked. I was a fan of this stock. I thought technically it was in a nice bullish ascending triangle. Here was the equal highs, and I thought here was the rising lows. But instead, you can see with earnings, it just broke right down beneath this potential ascending triangle. And I'm watching to see if we can reverse back above $12, because if we go all the way down to $11.35 today, intraday, on very heavy volume and off of this downtrend, if we could get back up and close above 12, that would be a very significant area of support that was violated intraday, and then a reversal. And then we could see a perhaps an increase, maybe to go back up and test that $13 gap resistance area. I don't know that I would view a big reversal as a longer term buy, but from a trading perspective, if we can rally on solid volume later in the day and close at around 12 or above, I think AMD would have an interesting candlestick in play. So with that, I know we got a few upgrades and a couple downgrades, so I'm going to let Erin take over and go over those with you.
All right, I'm here. Okay, I'll go share my screen. All right, so the first upgrade I have is SGen. I took a quick peek at these. Really nice move up here. It's testing overhead resistance, and you can see I do have a PMO sell signal on the way here. Actually, it looks like it has happened. So, even though it's upgraded, I would certainly want to wait for it to get above this short-term overhead resistance. But I wouldn't look for a play here just because I don't like the way the PMO is set up there. And other upgrades, IMAX. All right. Again, really nice breakout. This time, this is above that short-term support or short-term overhead resistance that's now turned into support. And you can see we just got the PMO buy signal. So on this one, definitely like this one better. I think we've got a pretty good setup here. And if I were to look for overhead resistance, the next area of really strong overhead resistance is up here at 30. So I think this one looks pretty good. Let's see, IBM is another upgrade today. I'm not a fan. We had that really nice gap up, but it appears it's trying to close that gap. So I suspect we have a little bit more downside going on here, despite the upgrade. You can see this reversal on the PMO in very overbought territory, certainly the top of its range. So I would be definitely cautious here, but you could have a really good opportunity here after the gap is closed. But I think that just concerns me a bit. All right, downgrades. I actually annotated Tesla. They are a downgrade. And I just wanted to point out that I think that this one is not going to be your opportunity necessarily. You know, when we get these downgrades, we look for those opportunities. This looks like a pretty textbook head and shoulders pattern, and it's now technically executed. It hasn't broken down below that 200-day EMA, but that would be a huge warning signal. The one thing, though, you know, we are seeing this revert or this head and shoulders, and the height of the pattern would take us back down here, probably to the high back here in February is what I would be looking for. However, I think there's an opportunity for Tesla to use that 200-day EMA as support. And, you know, I say that only because I can see this PMO. It is declining rather rapidly. But when we start to see that turn back up, I'd be watching, because we're in the oversold territory already near term for Tesla. And we got the breakdown from that head and shoulders, but there's the possibility we could hold that 200-day EMA, because right now, open and close currently above that 200-day EMA, even though we dropped a little bit below it in trading earlier today. But caution, but this one I think would be a good one on the watch list. It's tends to be on the top here as far as scooters are concerned, but you can see it's now hit some lows it hasn't seen in quite a while. So this one may be an opportunity, but not quite yet. And we can see with USG, I don't like the fact that it's hitting this overhead resistance area, and you know, it's not been able to punch back up above it. We've got a very overbought PMO, very flat. It is starting to turn back up, but let's face it, even if we got a buy signal here, it's really overbought. So I would be expecting a move downward, although we have seen a somewhat successful test of that 20-day EMA. I would still be, I still think this overhead resistance is going to pose a big problem, especially after a downgrade. So those were the ones I had for upgrades and downgrades.
Okay.
What do you think? Did you have any comments on any of those, or did you have something else?
Well, I had actually owned Tesla for a while, and I had gotten in, I think it was around it was after that big reversing candle that we saw back earlier in October. And so it was somewhere around the 343 or 344 area, and I had a pretty tight stop on it. And when we had that move down below 335, I actually, it took me out of that trade. So I ended up taking a small loss on Tesla. I still like that one longer term.
Right.
But I think that it's, you know, when you look at a longer term weekly chart, it's got some pretty interesting support from the 280 area that you pointed out back in February up to around 300. And so I'm actually thinking that maybe somewhere in that range, you can see all those tops going across on Tesla at about the 280, 300 area. I mean, dating back to 2014, 2015. So we made that breakout on increasing volume. And yeah, I mean, when the market's going up, you really don't like to see a stock like this underperforming and not going along for the ride. But I do think that long-term price support is in that 280 to 300 area. So I'm kind of licking my chops. I agree with you. I think that 200-day moving average is kind of interesting, and we'll see whether or not that breaks down. But if it does, I think it could set up a better longer-term entry into Tesla in the 280 to 300 area. So we'll kind of play that one by ear. I did want to mention, I know we got a minute or so before you get into the next market update. I'm going to go ahead and just share with everyone a couple of charts that I had put together looking at the 10-year Treasury yield and the S&P 500. So if you look at this chart here, at the top, I've got the S&P 500. The bottom is the 10-year Treasury yield. And this is for 2017. So that's basically this, year to date. The green highlighted areas show the S&P 500 mostly moving higher, but what it really shows is when the 10-year Treasury yield is moving up. Now, keep in mind that when the 10-year Treasury yield's moving up, it means money's coming out of bonds, out of the Treasuries, and that money a lot of times will find its way into equities. So these were just a few of the 2017 spikes that we've seen in Treasury yields and what has happened in the S&P during those periods. And once or twice, it looks like back in March, we kind of went sideways here, and also late June, early July. But a lot of times these pushes to the upside will result in a big move higher in the S&P 500 to accompany the yield rise. And I point this out because we just recently broke out above that 240 to 242 area on the 10-year Treasury yield. And if that continues, a lot of times what we'll see is a continued move higher in the S&P 500. I also did the 2016. Let's see if I get that on here. Yeah, here's 2016. And again, here were the biggest moves on the yield. And you can see that during these moves, we tend to see very positive action on the S&P 500. And I did 2015, so I'll just do one more chart here. And in 2015, when you go through these short-term spikes highlighted in the green areas, you'll notice that for the most part, you see movement to the upside. There are a couple of, little sideways, but for the most part, it moves higher. And it makes sense to me because everyone's always trying to make that decision and how to allocate their money. Do you want to put it in bonds? Do you want to put it in stocks? And so when money is pouring out of bonds, a lot of times the reason is that economic conditions are starting to heat up, or at least the bond market is perceiving that. And if that's the case, that generally would result in higher earnings per share for S&P 500 companies. So it makes sense that money would rotate from one to the other. Just wanted to point it out. I think some of the sideways and down action, if you look outside the shaded areas, a lot of times when the yield's moving down, that's when we tend to see money rotating away from equities because the yield goes down when money is moving into bonds. So there's this relationship I think is really important. And that's why when we talk about the 10-year Treasury yield potentially breaking out, it is very significant, not just for the bond market, but also for equities. So I'll let you get that next market update in.
All right, let's do that. And I'm going to, today this one, I'm going to go ahead and show you, let's see, the market summary and how you get to it. So here we go, market update number 2. Candle glance is what I usually do, but I'm going to go back here. I want to show you the market summary right here. I think this is really helpful. It also puts everything on one page, even more so than the candle glance. So I'm going to go down here to the major indexes. As we can see, NASDAQ 100 doing particularly well. Small caps and mid caps near the bottom, I would like to see them perform a bit better. As far as sectors, not a surprise, technology on top. We did have somebody ask about consumer staples, and they aren't looking so good. I'm going to take a quick peek at that chart. And as you can see, we've hit that area that was very strong support right around 53.50, and it's now broken below it. Not good. PMO sell signal. So you can see there's definitely some issues going on right now in consumer staples. In a way, that's good, because it's typically a defensive sector. And if we start seeing money rotating more into the discretionary, consumer discretionary, that would be good for the market. So although this is not good for XLP, it could end up being good for the market. That's all I have for the second market update.
All right, sounds good. Appreciate that. Yeah, the market, having quite a day, but especially on the NASDAQ, you got those the big ones coming through for us, the Amazons and the Googles and the Microsofts and the Intels of the world, all at the same time. And if you look at those 4 charts, I mean, it is just, and they're among the biggest of the NASDAQ 100. So when you get all of those going at the same time and you throw in Facebook and Apple, which both are having great days, I mean, that's how you gain over 100 points on the NASDAQ 100, is when you're getting support like that from, the big ones. Mm-hmm. But I know it is time for an earnings spotlight segment. We haven't talked to Mr. Hopkins in a couple of weeks as he was traveling last week. So this earnings spotlight is brought to you by earnings.com. Earningsbeats.com provides a unique stock trading service that provides its members with high reward to risk trading candidates. Unlike other trading services, earningsbeats.com focuses on companies that combine both solid fundamentals and strong technical charts to best manage risk. If you're looking for a trading service that utilizes patience, trading experience, and discipline to help you navigate the stock market, go to earningsbeats.com for a trial membership. Earningsbeats.com, better timing, better trades. Mr. Hopkins, how was your trip?
Not bad, Tom. Thanks for asking. How you doing?
Well, I'm doing great, but when I take a trip, it's like to the beach or something. I mean, you went across the world to India.
Went across the world to India, and I will tell you one thing. You quite often when you travel, you're going someplace, to get away, relax a little bit. Would not call this, a relaxing trip per se. I had a few reasons to be there. But I'll tell you one thing, it sure reminded me how great this country is.
Why?
Well, let's put it this way. I've never seen anything like the traffic and the way that they operate there. For example, there aren't a lot of lights, remember one thing. There are 1.2 billion people in India. So that's about a 4-bagger over the U.S. Mm-hmm. And there's huge concentration. I was in Delhi, where there's roughly 30 million people. And there's every mode of transportation that you can possibly imagine. I want you to picture being on the Beltway, okay? In D.C., you know what the Beltway's like.
Yeah.
But I want you to picture being next to you a bicycle or a motorcycle with 4 people on it. Or out of nowhere, a horse, with a rider on it.
Okay.
This is, are you getting the picture?
All right. Yeah, I'm getting a picture. I'm not sure I want to go any further.
Exactly. And, but anyways, it's the most amazing thing ever that it somehow works.
Wow.
Everybody sort of, it knows, where their lane is. And so it's really something amazing to see, but I'm just as happy to be back here.
All right. Well, after that visual, I'm not going to be upset with anybody on the highway ever again.
I don't think you will be. This is my whole point. Okay, this is my whole point.
LA traffic, I don't know.
I mean, a picture of being in LA with a herd of cows next to you.
Yeah, sometimes it seems like that's the case.
but literally.
Right.
It's really it's something to watch. I will tell you that. Anyways, I've been listening to you guys. You know something, Tom? What's really interesting, first of all, go back to 2000, when you and I were trading the market and when we had the big tech bubble. And I'll never forget, when the tech collapsed, the NASDAQ collapsed, and thinking it'll never recover. It'll never see the prices, that we saw back then. And then you see today where the NASDAQ is at an all, with the primary difference, of course, being companies are making money. And, back then, that just wasn't the case. And it goes to show you the power of earnings. But something I've noticed, Tom, over the last month is up until today, if you think about it, it's been a blue chip market the last month or so. A handful of stocks, within the Dow driving the market higher. The NASDAQ and the S&P really not making much progress since the beginning of October. And then all of a sudden in unison, like you're talking about, this symphony of tech companies, not one or two, but all the big boys reporting in unison and blowing it out of the water. And that's how you get 130 points in the NASDAQ. But if you look around the rest of the market, it's very concentrated, Tom. It's not like there's, 2,000 stocks going up at once. You've got when you have an Amazon and a Facebook and an Intel and a Microsoft, when's the last time you saw Microsoft up 7%?
Yeah, I get where you're going with it, but I also think, when I look at the market and I look at all the different industry groups, every single one of them have held price support. I mean, we're getting rotation, and I understand your comments about, not everyone is participating, but there are some really good earnings reports that have been coming out, and especially, I think it was underscored last night with those, the big 4 on the NASDAQ coming out with such huge results. But I mean, I'm still seeing money pouring into every area of this market. And with yields breaking out on the 10-year Treasury yield recently, that's going to be more money coming out of bonds. And, Martin Pring, who was on Wednesday, made a great comment, and it really gets down to the very basics. If you don't invest in stocks, where are you going to put your money right now? What are you going to invest in? Gold, which has been underperforming the S&P 500 since 2011 on a relative basis. You're going to put it in bonds at these rates, historic lows in the yield. He makes a great point, and I think that's what investors are realizing, and I think that's part of the reason why we're getting this melt up in the market. You want to see a more sizable pullback and relax things, but I think when the market goes through these bull market phases, they're telling you something. It's something.
Yeah, and by the way, the great thing about this too is with all the companies reporting earnings, and there's going to be more. Apple, of course, is next week, but it's going to present a great opportunity. Okay, look at it. Would be lovely if you were involved in Amazon to the long side and we're up 13%. It would be great if you were in Microsoft, up 7%. For people who don't trade, there are some people who own these stocks, but for people who trade, you and I have noticed that when you get involved in a stock before earnings, it can be a crapshoot. But let them report like they have at this point. Let's take a look at Microsoft. Right here's Microsoft up sharply. I'm not going to chase it, right now. But I know that when things settle down a little bit, which they will, you don't know when it's going to be. It could be a week, could be a couple of weeks, whatever. There will be. When's the last time you saw a stock that just went up and never came back down? So this is where you have to be very patient. It could take a few weeks, but Microsoft's going to come back. Amazon's going to come back. Intel's going to pull back. These are the stocks that people want to get involved in. And so what we do at Earnings Beats is when companies beat earnings expectations, they end up in we call our candidate tracker. And then we keep an eye on them to wait for strategic pullback levels. Now, when you have stocks like this that gap up dramatically, where do you get involved in a stock like Microsoft? When you take a look at this thing and see where it is at today, do you get involved when it pulls back to 84? Do you wait for it to pull all the way back to 80, before it broke out? I would contend that at some point, I believe Microsoft's going to pull back to that 80 level. And I don't know when it's going to be, but there's going to be profit taking. And this is when you want to get involved. If you start getting involved I'm not going to buy Amazon up 13%. It could go up another 10%. I don't know. But I'm not going to buy it up 13. I'm going to wait for it to pull back. And this is exactly what we're all about, is waiting. Look at Amazon.
Yeah. When I look at these charts, though, to me, Amazon, even though it's up a higher percentage, I actually feel better about Amazon for two reasons. Number one, when you look back all the way to June, this stock has gone sideways. It's been consolidating those prior gains for quite a while. And I like stocks that base before making that next big move to the upside. So you have to, you want to say, well, I'll wait until it goes back to 975. But a lot of times these stocks don't go back to 975 because when they beat their earnings expectations, all of a sudden future earnings projections change. And the companies out there that are watching the Amazons of the world, they start raising their price targets because when you discount their future earnings back, it's going to be a lot higher after they've beaten estimates and they start reporting much better numbers than what it was previously. So you're going to have difficulties with some of these getting them all the way back down to the bottom of it.
I agree.
And that's why I think with a stock like this, look at the difference between this candlestick where you gap up at 1050 and keep going higher versus Microsoft, where you've already made a huge move prior. You gap up and you can't get any further, despite the fact that there's almost 50 million shares that have traded in the first half of the day. To me, the two pictures are different. They're both had great earnings, but in this case, I think Microsoft has already built in some of these earnings. You're gapping up, and you're actually getting a lot of sellers after the gap up, where, again, if you go back to Amazon, since it opened, it's continued going higher. I love these kinds of candlesticks. Amazon's probably going to continue to do pretty well based on it. But we talk a lot about having patience, and I want to just tell you about IBM, because IBM came out finally with a great report. Market love. Look at the volume, but look at what's happened since earnings. Coming back down. Now, I like IBM, and I'm kind of watching this one, getting pretty excited as I keep watching it drop. Because I like it at the rising 20-day moving average.
Me too.
I actually took about $1 loss on this stock. I tried to trade it right at gap support. It had gone below gap support intraday, and it came right back up. And I had put in a stop buy so that if it came back up and went above that level, it got me in the stock. So it did that literally by about 2 or 3 cents, and then went straight back down.
Of course.
So yeah, so the I had a stop below the earlier low. So when it kept going down that day, I ended up getting stopped out. But this is one that I'm kind of watching. And now that it's lost the top of gap support, that's when I start looking at the next level, which to me is that rising 20-day moving average. So if we could get a reversing candle somewhere around that rising 20-day moving average, I think IBM would be kind of interesting.
And I think it will be once the flurry of buying and the excitement in the stocks today wears down, which it will in a day or two. Then, money will start, moving back into I think companies like IBM and some others. I got a couple quick stocks here for you.
Okay.
Our chart of the week, you can find that at earningsbeats.com. Is VFC, Victor, Frank, Charlie, VFC. Okay, here's a company, that reported. Look at that blast off. Got to be a little patient here. I'd like to see this thing pull back. Maybe to the, 66 to 68 level, just above the 20. And on, maybe light volume, be patient, let it pull back, keep a tight stop on it. I think it could revisit, that 71, 72 level. So the closer we get to that 20-day, my reward to risk is going to pick up, quite strongly. So this one's definitely on the radar screen, but being patient, you don't need to chase it, let it pull back and, get involved.
Yeah, it definitely looks like there's some accumulation here. Just overbought.
It's overbought.
I always look at the RSI, and I rarely will buy a stock when the RSI is above 70. And I think it was might have been Microsoft, or one of them that we were just looking at was 90. Look at Microsoft with today's move. RSI is at 90. I mean, there's just no way I'm ever buying a stock with an RSI.
I agree. And that's actually, if you look at Amazon, you look at stochastics in the 40s, and the RSI is up there a little bit, but there it goes to show you the difference in the two. Like you said, it's already made the big. I mean, you got stochastics mid 40s, 78 on the RSI, which is stretched, but this could go higher.
Oh yeah, I think it's probably going to go higher. And the other thing is on the NASDAQ, I think I posted it in my blog this morning, but from today's close through November 6th close, this 10-day period, roughly a 10-day period, is one of the most bullish periods of the year. So we're getting out of a historical bearish period where we did see some selling intra-week, but now we've made up most of those gains, or most of those losses, if not all, across all major indices. But now we're heading into a much more favorable period historically as we get closer and closer to close. So I would expect that the market's going to continue to remain overbought the next 5-10 days.
All right, one last stock, SYNT. Let's take a look at SYNT. See what we can do with this one. This was sent out as an alert to our members today. Look at the nice big move on the, big volume earnings gap up. I'd like it right here. And I also like if it pulls back maybe just above that 20-day, with a pretty tight stop. And if you do that and the stock resumes its move higher, you could potentially, have a 10 to 15% move to the upside with a very limited downside risk. So this is one that I've been looking at that I put out today.
Yeah, and one of the things, and I talked about this when I did a trading gap segment a week or two ago, but when you get these big gap ups with earnings like this, and you have a hollow candle and you keep rising, a lot of times when they pull back, they don't always go back down to fill the bottom of the gap. They come back down to the top of the gap. And you can see that SYNT did this exactly right to the top of this gap support before it started rising again. And so now looking at this, I would definitely be looking around that 22 area.
Yes.
If it continues to fall, because you do have that rising 20-day. So you're going to have buyers that follow the 20-day looking at the stock. And then you also have those who follow gaps and trade gaps that would be looking for possible entry around 22 as well. So
yeah,
I think closer it gets to 22, the better the reward.
The better. And then you have your stop. If you were to want to be super conservative, have your stop, close below that 20-day. You maybe have a, very 1 or 2% downside risk, maybe, in exchange for a 10% upside. I'd love that, 5-to-1 type, movement. So those are the ones that have caught my attention. And it's going to be interesting because we got still a ton of companies coming out. This is our time, at Earnings Beats. This is what we're all about. Scan for stocks that beat earnings, look for the best of the best, be patient. And then over the next few weeks, as some of these start coming back to us, those are the stocks that traders are going to gravitate to. When Amazon pulls back, Microsoft, Intel, Google, when all these stocks pull back, there's going to be people sort of licking their chops and rubbing their hands together, say, I'm going to get involved when this thing pulls back. Just have to be patient, Tom. It's all about being patient.
Yeah, and I think most of the big names that report in October have reported. I mean, there's still some coming up next week, but actually the number of companies that report increases, and I think next week is the biggest week of earnings season. But it's just more of the mid cap, the mid tier stocks that are reporting next week. A lot of the big names, the Dow components, a lot of the big names on the S&P and NASDAQ 100 and so forth. Many of those have already reported, but we'll be getting that second tier. And so I wouldn't be surprised to see some additional strength in maybe the mid cap and small cap index as we get through the next week or two.
I agree. All right, my friend. Well, it's been great talking.
Yeah. Welcome back.
I appreciate it.
Glad you had a nice trip, and we'll talk to you again next week.
Okay, sounds good.
All right. Thanks, John.
Bye-bye.
All right, there he goes, Mr. Hopkins from earningsbeats.com. You can check out the website. That's earningsbeats.com. Yeah, so Erin, I guess it's time. Why don't we jump into the 10 in 10? And I'm going to try to go through these quickly. I'm going to act like Julius or I'm going to act like we have a guest with us that I have to hurry up and get through this so that we can try and get through. Maybe we can sneak in a couple extra ones because
I was going to say, yeah, people are saying, I thought you said you do 20 and 20.
Well, we'll try. Let's see what we can do.
We'll see. We do have a lot of requests today. I don't know what it is, but a lot of interest. Well, we said we'd start off with OXY, so I guess we should get to that one first.
All right. Well, you got a negative divergence. So if we fail to hold the 20, so far we're holding that 20-day moving average. But the only thing that really bothers me here is just in the near term. And these are not all, I mean, nothing in technical analysis works 100% of the time. So you got to keep that in mind. But you do have higher prices and you do have this lower MACD reading. So it's just a signal that momentum is slowing. Volume, however, really didn't slow that much. So I question whether or not that's going to be the case here. I would watch from a price support standpoint these recent lows. So after this move to the upside, you can see the volume pick up on this hollow candle right here. Notice the reaction low. And when I say reaction low, it's just off this uptrend. This is the next low that we have on some selling. Comes down just around 63.40 or so. And notice today's low, 63.65. I think if we go back down, reverse below that, then we probably are going to move down maybe to this next level around 62. But overall, I actually like the stock. I think that this increase in volume on this push to the upside has taken out some key short-term resistance. And I would look for, outside of maybe a little consolidation, I would actually look for higher prices ahead.
All right. I don't know how all of you did with your notes, but there you are. The next one I have for you is XES, the oil and exploration, sort of where we were going with Oxy, but we'll just continue on that vein.
Yep. I will tell you that potentially there is a very bullish reversing head and shoulder pattern in play. So I'm not going to mark it here, but here would be your left shoulder. There's your neckline. Here's the lower low for the head. Notice the volume coming down here is much lighter than what we saw during most of the selling on the way down. So I think that's a good thing. It's kind of telling me that things are exhausted. Notice that the volume picks up as you establish the right side of the neckline on this advance. And now we've pulled back and we're starting to put these tails in. We actually had a hammer print yesterday and we're starting to put in higher highs and higher lows. This could be exactly the right shoulder to match that left shoulder. So I think you could get aggressive here and just keep a fairly tight stop. I think if you close much below 14, I'd be very disappointed. But I'm looking for a reversal here and a move back up and break out above the 1660 area.
All right. The next one we have is IRBT, iRobot.
Okay.
And let's see, they mentioned that there was no gap on earnings.
Yeah, this just looks like one of those, there's never just one cockroach in the kitchen kind of charts recently. I mean, I actually liked this stock back when it had gapped up with the earnings here. We broke out, but notice after holding the top of the gap, we couldn't hold it. We fell. And then we went back up, tested it from underneath, and that's where the volume started picking up to the downside. And we have not been able to close above that falling 20-day moving average. So I think what I would be doing is watching that 20-day. I wouldn't be at all interested here until you get a close. Here we had a head fake on that gap up, but that does not look good to me. When you gap up above the 20, can't hold it, and on this kind of volume break to new lows, I think it's in a downtrend. I would avoid it for now.
All right. The next one I have for you actually was getting a lot of interest in the chat room, and that is Visa V.
Visa V. Yeah, it's hard to not to like it. I mean, you got a great uptrend in play. Maybe there's a slight negative divergence in, but it's had that for a while. Actually, I would say, let me see, I want to get this trend line. And by the way, it's pretty easy using these tools just to annotate. And that's part of why we do this, just to show you how easy it can be. I'm going to say right there is a pretty decent trend line that comes in at about 104. And the most recent low after we had any selling was right at about 102.5. So I would say this is an area from a longer term perspective that I'd be watching on Visa. But short term, I mean, look at the volume coming in as it makes this breakout. So if you're considering this a little bit of a negative divergence, slowing momentum, I would argue that higher volume with a breakout does not mean slowing momentum. So I'm not seeing anything really bearish here. I would say I would be holding Visa. If I was looking to go long, it'd probably have to be on a 20-day test, but I do like the stock.
All right. The next thing I have for you is from Canada.
Okay.
SCY.TO.
All right. Yeah, this one has just been going sideways. I mean, when I see a chart like this, I just immediately pass on it just because we've been in a bull market, really a global bull market, and yet we're just simply going sideways. The other thing is it's 31 cents, and you can see that today's volume is 28,000 shares. What's 28,000 times 31 cents? That's about $8,500. That's the total volume. That's the total dollar volume of this stock. So in other words, if you invested 8,500, you would control the market today in this particular stock, which is just way below any threshold that I would ever consider. So I don't like it, number one, because of the liquidity, but just looking at the price chart, when there's so many options out there with the market looking really solid, I'm not going to try to bottom fish. Now, if you got staying power, long-term staying power, and you're really comfortable with this stock, then maybe it would be for you. But as a trader, a fairly short-term trader, this is something that I would ignore and pass.
All right. The next one I have for you is Immunomedics, IMMU.
All right. This one had a negative divergence, and it actually has settled back down close to the 50-day moving average, moved a little bit below it. But I think price support is the biggest thing to watch here on this chart, which is down here, just about, probably $9.50 or so. So we got down to 10, but I still think this breakout where volume was expanding is providing the best support, or will provide the best support if we get down that low. And I'm not saying we're going to go down there, but notice recently we've been struggling to get through this 20-day, and the 20 is crossing below the 50. So I would not be entering here. I mean, I think we could have already bottomed. We had a negative divergence. Here's a lower price or lower MACD, higher price. So the negative divergence has already worked its way out. We've gotten a 50-day test. MACD, came all the way back down to the center line and then some. I think this is a bullish looking chart, and I probably could draw a trend line on here as well. So I think if you kind of go across here, you see that pretty nice trend line. This comes in just at about the $10 level, and you can see these recent tails. I think $9.50 to $10 is your key support on this stock, and it was just up over 14 not that long ago. So any kind of a pullback in the 10s seems to have a pretty good reward to risk.
All right. The next one I have for you is from Twitter, WDC Western Digital.
All right. Yeah, this one I actually like. I like it quite a bit. Heavy volume today, but I love that tail to the downside. And I think I had written about this one maybe in Chart Watchers or Don't Ignore This Chart blog somewhere. Let me pull up and show you this triangle. Now, I think longer term, there was a more of an uptrend. I mean, you can see the uptrend here, but I think if you look at a longer term weekly chart, you'll see more of an uptrend. And this is a symmetrical triangle, which normally resolves itself in the direction of the prior trend. So I think the long term uptrend actually benefited from this gap up on increasing volume about a week ago. We've pulled back, we've tested the moving averages, we've tested the downtrend line in this triangle. I think this one's poised to go higher, and I would expect it to move up to the 95 level.
All right. The next one I have for you will be Yandex YNDX.
All right, Yandex. I think we're getting very bullish consolidation here. There was a negative divergence on the most recent high. So I think part of that, here's the higher prices, here's the lower MACD. So we went back to the center line. Look at the volume pickup as it was trying to make the breakout. And this is one of the reasons why I like to take my profits at resistance, because you can see we got up just above 34, hit the breakout area, and we failed, came back down. Now, I still think it's in a bullish formation here. And I would say if we look at the auto support resistance, I think the recent low kind of matches up with these highs and then these lows. So 31's been a pretty important pivot area, and we've got resistance just above 34. So this is the trading area that I would be considering. So I'd be a buyer closer it got to 31, and I'd be a seller the closer it got to 34.
Okay. Medtronic will be next. MDT. I know my PMO looks pretty strong on it, and the scooter is starting to do pretty well.
Yeah, I'm going to take a look at the weekly chart. I really like this breakout because you've got an overall uptrend in play. And I don't know if you all were in here when Arthur came in, but he talks about the fact that you've got an, when you have an uptrend in play, you're looking for confirmation of bullish patterns on a chart. So here you can see we were in this downtrend for a while after recently setting new highs, got a nice uptrending chart in play, and then we actually broke that downtrend line. So I'm just going to annotate this and just show you right here. It's a little tougher on a weekly chart, but you can kind of get an idea. I don't know. I mean, I could draw a line here and call it a wedge, but I'd rather just say this is more of like a channel of sorts to the downside here after an uptrend. And now we're breaking out of it with the volume starting to pick back up again. So I think MDT looks really good. I would be a buyer.
All right. The next one I have for you is FedEx, FDX, and that is number 10. I wanted to look at the seasonality, so I looked at it. It's looking pretty good.
Pulling
I know you've gotten me hooked.
Yeah, I like it. Okay, FedEx, is that what you had said?
FDX, yes.
Okay. Yeah, I like the breakout here. He had actually a little bit of an ascending triangle in the near term, but the key level here is clearly the breakout that we got above 225. But if you look at these two highs, equal highs, and then you look at these rising lows, you actually had a little bit of a an ascending, short-term ascending triangle right there. So this breakout, we did get a pickup in volume to confirm it. This would measure 218 roughly up to 227. So that's $9. I'm going to say 236 would be my short-term target.
All right. That was 10.
Do we want to do a couple more?
Yeah, it's I think everybody's interested because we haven't had like any action in the chat box for 10 minutes.
Oh, okay. Well, I'm either
I don't know if it's broken, but yeah. So people are very interested. So let's keep it going. Why not?
Right.
How about Ford, F?
Okay. Ford just reported some very nice results. But at least on the bottom line, I actually didn't see the revenues, but I think they beat. I think they were like 43 cents versus 33 cents expected. But this hasn't been one of the best stocks in this space. I mean, you look at this and you say, well, what do you mean? It's had a huge run. But if you compare it to GM or to Ferrari or many of the other auto companies, Ford has actually been lagging on a relative basis. I think the key here for Ford even with the solid bottom line results that came out, we're struggling with price resistance. And that price resistance is pretty clear around $12.30. Now, the good news is we're consolidating and we're putting in these higher lows. So perhaps we're going to make this breakout to the upside. That would be a bullish development. If I owned Ford, that's what I want to see. I want to see a close over 1230, and I want to see a heavy volume accompany that move.
All right. Yeah, and I've got a comment. Yes, keep going. Okay. Kohl's, KSS, interesting support level, but I just got the PMO, it reversed below the signal line. So, and the scooter just took a dive on this decline. So I personally am not sure. What do you think?
Yeah, this one is kind of iffy. I would be really careful if that recent low is cleared to the downside. So I'm okay with it. I think there was one level clearly where we topped here with this black candle. And then I would say also there was some pretty good resistance right in here at about $42. So I think this 42, 43 area has been really critical. And we went through that. I would like to have seen a little bit more volume, but not bad. And then when we came back down, we put in a bullish engulfing. I don't want to lose this level right here. I would be really careful if we lose 41.5 to the downside. This is in a space that actually is doing pretty well right now. So I got a lot of mixed feelings with Kohl's, but I would watch from a price perspective 41.5. And if the volume picks up and that level is lost, I would be out of the stock.
All right. The next one, it's sort of in the same position, is Sirius XM. I mean, it's sitting right on some really nice support, but I got a PMO sell signal, and the scooter is starting to wane just a little bit.
Yeah, I'm sure the PMO is a lot like the MACD. When you consolidate, you get a lot of these, movements back and forth. And so it's really hard to make an overall judgment. I would just say that the longer term uptrend remains in play with Siri. It came out with earnings per share that beat expectations. I think it was 6 cents versus 4 cents recently. But you've got this gap. See this gap right here on the massive volume, almost 80 million shares. This was the July earnings. And notice when we come back down, we have been holding this 540 level, and we've had tails 2 of the last 3 days down in the 540s. For me, it's a 540 close that I'd be watching really close on Sirius. As long as it holds, I actually think what we're doing is sideways consolidating off of an uptrend, which I think is a bullish pattern. But if we lose 540, could be a completely different story. So that's the level I'd watch.
All right. The next one I've got for you is TRLD.
Tailored.
Yes.
Uh-oh.
I think I have the wrong one.
I think it's TLRD.
Yeah, that's not a surprise. Yeah, I wrote it down wrong.
Tailored brands. That's all right. I'd seen the stock. I've seen that symbol a lot. I love the volume and the breakout above some pretty key resistance. So I think this one has turned the corner, is now uptrending. So I would play it using bull market rules. But right in here, about $15, you can see after moving down on very heavy volume. Notice this is what I call reaction highs. After selling off on big volume, this was as far as we could get on these moves back to the upside. And that included the heavy volume gap up here in May we couldn't get through. Also volume picking up a little bit here in September, couldn't get through, did it again at the beginning of October. Look at the volume coming as we finally took out that level. And also notice the rising 20-day, which is near 15. So if this stock were to pull back and get close to 15, I actually like the reward to risk quite a bit here.
Okay. See, the next one I have for you is Exact Sciences, EXAS. Really nice breakout. The PMO is getting ready to come up for a buy signal.
Yeah, I like this one as well. Nice uptrend that it's been in for quite some time. The breakout that you're referring to, I like that. Anytime you're getting a nice, move here, you can see the volume picking up. Now you might look at this and say, well, yeah, but we're breaking out with a negative divergence, and that is true. But a lot of times in mature uptrends, when you finally get a breakout, a lot of times you do initially have a negative divergence. But if you stick with the trend and it continues rising, a lot of times that MACD just keeps going up, and eventually you eliminate that negative divergence. So I'm okay with it. Volume's picking up. We've got 1 million shares already traded. We're just a little bit past the halfway point in the day. So it looks like we're going to have better than average volume today on this breakout. So I'm bullish the stock. I would maybe to the downside, if there was one level maybe to keep an eye on, it might just be, I'm going to just try and eyeball this thing, but looks like we got a decent trend line. Well, that goes all the way down to 45, which is the prior low. Yeah, I'm not sure the trend line really helps me because I don't want to wait that long on the stock. I would probably be using that rising 20-day moving average, which has really offered up great support for the past 2.5 months. So I think as long as the stock stays above that rising 20-day, I'd be bullish.
All right. The next one I have for you is Celgene, CELG. And the daily chart is super ugly. The weekly chart, I think, is more interesting.
Yeah, they came out with one of their drugs, I think, a couple weeks, or it was probably on this first gap down, or maybe it was second one, I'm not sure. But there's been some bad news that they've gotten from the FDA on a couple of their trials. I think they completely suspended some work with one of their key drugs. So I think that's part of the problem. Well, that's a lot of the problem with Celgene. And anytime you get this kind of volume, supporting moves to the downside, the only thing, the biggest hope that I could offer up here on Celgene is that this hammer that printed yesterday is on ridiculous volume. And so maybe off of this huge decline, I mean, we're talking about from 145 down to 95 in what, 3 or 4 weeks. Maybe that's an exhaustive type of gap down. But if it is, the low should hold. So if I was in Celgene, I'd have a stop for sure below about $94. And the other thing I just want to mention is when you get into these gap downs like this, sometimes you get another piece of bad news that comes down the road. So if you've got an intraday stop and you're holding the stock overnight, you never know when you might get another piece of bad news. So that, Celgene is just very risky right now because of the huge volatility and the volume that's been accompanying the selling. So I would avoid it. But if you're looking for a possible reversal, if yesterday doesn't do it, I don't know what will, because that is massive volume. And we did recover up almost all of the losses earlier in the session from where we opened anyway, getting back up near the high of the day by the close. So that's a nice reversal with massive volume. That low should hold. That should be a big support.
Look at that weekly chart on that one, because it is some pretty key longer term support too. I don't know if you saw that.
Yeah, let me look at it 1 sec. I forgot to annotate this while I'm.
There we go.
Yeah, checking out that move to the downside and this kind of volume right there is just really crazy.
Yeah.
What is it, 75 million shares or something? I mean, you look across this chart, 10 or 15 million shares is considered huge for Celgene. So for them to trade that kind of volume is just crazy.
Yeah, absolutely.
But I'll pull that weekly up for you 1 second.
Yeah, no problem. And then that's 15, and we are getting pretty. I have a lot to present for the sentiment, so yeah. I think we'll have to move along.
I know you can go through your update pretty quickly. And here was the weekly. Yeah, you've got some pretty key support coming in here around $95. Yeah. So this is a very interesting level on the weekly chart for sure. I mean, we tested $95. It looks like, I don't know, 8-10 times at least in the past couple of years. Not with this kind of volume, so you don't want to lose that level with the kind of volume that's been coming in. But yeah, you could make an argument here on Celgene for sure.
Yeah, I thought that was interesting. All right, so 15 in 18 minutes, I think.
Well, we started at, I think it was 53 past the hour, so I think it was 15 in 20 minutes or something like that. Yeah. Actually, I think I was 16 stocks that I have.
Oh, okay. I must have missed one in there. Yeah, I'll be able to see it when you pass me that list. So
there you go.
All right. Well, I'm going to go ahead and steal the screen back. And I'm going to give us a quick market update. You can see I had the Celgene chart up. It was really interesting. Okay. No wonder everybody's talking about it. So let's go ahead and, as you can see, as far as our headlines are concerned, the S&P 500 is hitting a new all-time high. The NASDAQ has set a new all-time high. Technology is crossing above 80 on the BPI. So technology is definitely taking the reins today. Seems to be leading the market the most. And see, the NASDAQ 100, 2.75% up, and the NASDAQ itself up over 2%. And in comparison to the rest of the major indexes, a lot different. So I just wanted to show you that for our final market update. So no, this was only the second one, right? No, that was the final. I have so much fun in here. I always lose track of where we are on the show. All right, so I wanted to start and look at some sentiment charts. And I think, well, I'll pull it up here. And there's interesting sentiment out there. I don't think we've hit. We haven't hit the extremes that you need to see to really get information out of sentiment. I mean, sentiment is best when things are stretched out. And here's an example. So this is the 10-day put-call ratio moving average. And what we're looking for now, because we're on our way up here, is we want to look for top. I'd like to see it top a bit higher than this, because when we top a bit higher, you could see it works out a little bit better. This was definitely more of an anomaly there, but I think it's because you can see even the put-call ratio was low on the OEX, and that's usually a hedge. So a lot of times you'll see them more opposite, like you do here, where you've got the put-call ratio on the OEX lower, but it's higher and peaking on the CBOE and equity. So that's what we're looking for. And typically you're going to get a rally out of that. We don't know how long it'll be, but we need to see this stretch out a little bit more. That's my sense. And, the fact that we're getting the OEX up there too, I really like to see a bit of opposite action there, but we just need to get stretched out a bit more. We're just not there. This is the AAII sentiment. And I've been talking about how we're really not getting the enough bearish readings. We want bearish readings. We want everybody to be bears. We want everybody to not be happy. That's when the market reverses to the upside. It's contrarian. So for example, Friday, after setting new all-time highs, I think I even wrote about it. I was watching the business channels. And honestly, I don't think I've seen the broadcasters that excited and giddy. Like they were laughing and just couldn't even sit in their chairs. And so to me, when you start seeing that kind of bullish activity, I start to look for a pullback. We got some of that obviously this week on Wednesday for sure. But I always look for that. So you can pay attention to that. If it starts hitting magazines, for example, that everybody is very bullish, that's when you start looking for the bearish reversal. So with that, AAII, as you can see right here, we're kind of even as far as bulls and bears. What I wanted to point out though is this ratio. If we're close to 1, that means we're pretty even as far as bears and bulls. So we really don't want to see that. That doesn't tell us anything. We really want to get these either really low readings on that ratio. That means that everybody is very bearish, or we want to get these really spiky highs, because that means everybody's just too bullish. And you can see we're just not there yet. So it's heading lower though. So I'm really waiting for people to start getting really bearish at this point, and then we can start looking for a solid move to the upside. Right now, we're kind of in that consolidation zone, especially when you look on the daily chart. And the name exposure. This is the National Association of Active Investment Managers. These are the money managers out there. They let everybody know how exposed they are to the market. What I found interesting is that they've upped their exposure a bit. And these numbers came in yesterday. And so I think that's interesting. But like I said, we're at that low. We saw the exposure moving pretty low before. And typically when exposure starts to hit a low, that's when you start looking for that reversal again. When money managers are not as exposed, they're pulling back. That means they're bearish, and that's what you want to see. So I think it's interesting that we did, if you look in the thumbnail, come a little bit up. But overall, we're still trending down. And again, I would like to see it get more bearish. I would like to see their exposure drop further, get it down below 60. And right now, it looks like it may be heading up. So we're going to keep an eye on that, because if it gets too bullishly extended, that's when we need to worry. This is the Wall Street Sentiment Survey. I'm actually going to show you this one on Monday because this data is from Sunday. But as you can see, as far as polling was concerned, we had the market timers were mostly bullish to a great degree. And of course, that's what I did. I was on that bullish side with the majority of people there, and didn't work out so well, at least when you consider Wednesday. We'll have to see how the week ends up finishing. I haven't gone over the ICI charts. They're monthly charts, and we don't, they lag quite a bit. But I happened to look here, and I was looking at money markets. This tells you how many assets are in money markets. It's been rather flat. We're pretty much at the same space, but boy, you can see when we have a big decline how that spikes up. So I would say we're not looking at, again, anything overly bearish, anything overly bullish, because we're sitting in the same area we have for 7, 8 years. So it's not telling us that much, except that, we're keeping fairly even as far as that goes. And I'm trying to remember which of the other two I thought was interesting. Yeah, this one I thought was very interesting. You can see the total assets in mutual funds, as reported by ICI, is now getting in this, I would say, very overbought area, because it wasn't even that overbought before these declines that we had back earlier. Of course, the giant bear market bottom, but you can see we got a top back here and we ended up moving down. So that should be a little bit of a concern, but at the same time, everybody's throwing their money in the market right now. It's been so bullish. So I don't know if we can read too much into that as far as, the contrarian bearishness goes. And as I said, this was the last readings came in August 31st. So those are very much a lag. Gold and silver sentiment. All right. What I've been pointing out, this is Central Fund of Canada. It's a closed fund. I think they call it closed fund. So what we really want to see here is some more bearishness. People are fairly bearish on gold right now, but you can see the discounts to buy CEF haven't really reached the kind of oversold area we want to see. So we're going to have to see people get even more bearish regarding gold. Right now, I'd say with readings like this, it's mostly neutral. So that would be our gold sentiment. And then finally, the RIDEX asset analysis. We take the RIDEX funds and we get the number of assets that are currently within each fund. So we have the bear funds, the money market, and then the bull and sector funds. And as you can see, it's easier to see in the thumbnail with this chart. We had a great spike here. We've seen a great spike here on people investing bullishly in the market, to a point we're starting to hit some of these highs back in late 2016. So I find that pretty interesting. It hasn't, normally what you want to see is if you get those readings, you should expect a move to the downside, but that was not the case here. And again, that's when this strong bull market rally began. And I'm a little concerned, like I said, that we've gotten up above, I would say, what we saw here, but it just really wasn't that hurtful as far as sentiment goes, with people throwing a lot of money into the market. And you can see, where is it coming from? Out of money markets, because the bear funds are staying mostly even here. So people still have their hedges in there, but people are a lot less bearish because they're pulling the money out of the money markets and investing them. And that's basically what this chart is showing us. So it is, I would normally, if we weren't in the kind of rally that we are in now, get a bit worried about these readings. But we can see they've gotten higher in the past. And I suspect we're going to see them move even higher. So that's my sentiment view at this point. I did tell someone I was going to look at the NASDAQ climactic volume. Let's see, my climactic indicators. And I'm going to pull up, there we go, NASDAQ 100 straight shots. And I should have, yeah, that one I've lost some of those indicators. Let's see. Look at the Swinland trading oscillator. All right. So we can see as far as the NASDAQ 100, and I apologize, the chart is not really set up right, but if I change it, I'm going to lose my indicators. So this is the short-term indicator chart right now. And I think it's very interesting that we're still seeing a pullback here on the NASDAQ 100, but with this really nice gap up and pop here, I expect we're going to see these bottom, and that's a good place to bottom because it's in near-term oversold territory. So I think that the NASDAQ can certainly handle moving a bit higher as far in the short term as far as our indicators. And you can see right here, I'm going to be changing my DP scoreboards more than likely after getting all these PMO sell signals. Now we're starting to see that pop up, and we're getting the PMO buy signals starting to show up on these charts. So it's been a fun week as far as the back and forth on that on the DP scoreboards. But I thought that one was interesting, and I think I have one. I wanted to look at the new highs, new lows. All of these, I didn't create well, I did sort of, but these you can get as part of the decision point chart pack. So I think that that would be something interesting to look at. I don't really want these. I'm trying to find my new highs, new lows. This came in just recently, so I apologize that I don't have the chart right up and ready. Okay, so this is what I wanted to look. This is, okay, I don't want the NYSE. We're going to go to the NASDAQ. Do I have NASDAQ? There we go, NASDAQ 100. New highs and new lows. All right, so what I look for on these charts, these are climactic indicators, so I look for things to stretch out or give us an impulse reading. Today, we're going to get an impulse reading to the upside. And I am not looking at this as an exhaustion kind of reading. I suspect we're going to see even more move here. We're going to have even more new highs. This is an initiation impulse, in my opinion. You can see back here, that was another initiation impulse. And everybody's like, well, how do you know if it's an initiation or an exhaustion? It's an art, not a science. Typically, if you're coming off of a decline like we saw right here, and you get a reading like this, that I would expect to see as an exhaustion of this decline. This one was a little bit tricky because we were already in an upswing. So I'm pretty sure when I saw this, I did look at it as an overbought reading and was expecting an impulse lower. We didn't quite get that. So, but we did start to see it top right about here at that last one. So I thought those were interesting, and I did want to point that out on the NASDAQ 100. And I think the other thing, we did already look at the dollar, but I just wanted to show my DP version of that chart. Oh, and the gold chart, because I think that one's particularly interesting. I won't spend too much time here on the dollar, but there's that left shoulder head and right shoulder, and that really just beautiful execution. All these colorful arrows, I had pointed out, oh gosh, when did I write about this? For chart watchers over the weekend, I was seeing all of these positive divergences with the PMO. I mean, look at this on so many levels, longer term, shorter term. So I was expecting this breakout. I thought this was a great place for it. And then finally, gold is at a quote unquote decision point, in my opinion. We've now hit this very important support area, I would say, at this top from February, and especially this bottom that we got in earlier in this month. We're at a decision point. It needs to make a decision. Unfortunately, I suspect it's going to be to the downside. We have that intermediate term trend model neutral signal that came in. You can see that the PMO top below its signal line, it's not turning up yet, so momentum continues to be negative, and Scooter's still in the basement. So I'm expecting to see gold break down. I've been calling for a move down to 1200, unfortunately, for everybody that is looking at gold. If we do get this rally to continue and we see more upside and the dollar starts to continue to take off, gold doesn't have a chance. I think I would expect it to fall at that point. And that's what I have for the decision point sentiment and report. I know we're pretty much down here to the end.
Yeah, there were actually a couple questions came in, so I thought maybe I would just go over a couple of them real quick. One question that came in is, do all gaps have to be filled? And the answer is, of course not. I mean, not every gap has to be filled. Most do. But I pulled up NVIDIA, and I just pulled up a 3-year chart. And you can see, back in August when the stock was closer to $20, it gapped up, went back and filled the gap. Here in November, it gapped up, ended up, a couple months later, going back and filling the gap. And you see that throughout much of this move until you get to May. And here you can see a gap up. We kept going higher. We haven't filled this gap. I mean, we'd have to go back down into the mid 30s probably to fill this gap. Here's one over here in probably around $70 that hasn't been filled. Here's one over here at about 100 that hasn't been filled. But what I would say is NVIDIA is an exception to the rule. Not too many companies do what NVIDIA has done over the past 2 years. I mean, this stock's gone from $20 to $200 in 2 years. Not too many companies have 10 baggers in 2 years. And those that do probably are blowing things out of the water in terms of their earnings, and they're getting gaps that don't get filled. But NVIDIA, again, is kind of sitting out there on an island by itself or with a few other companies. But we're talking about one of the best performing stocks in the market here. Most stocks, when they gap up, will go back down and eventually fill. And I think a lot of times the timing to get back there depends a lot on how the gap's set up. I mean, is it a gap up with massive volume where the buying continues all day long and we get one of those real hollow, candles? I mean, when you look back at NVIDIA here in May, you can see the massive volume that came in. It gapped up and it kept going higher. This stock ran from in the 30s up to about 50 in 2 weeks and coming off a massive volume. Those types of gaps are very difficult to go. In fact, I wouldn't even be looking for the stock to go back to the bottom of the gap. And instead, if it pulled back at all, I'd be looking at the top of the gap. So it just depends on, your different strategies in the stocks that are gapping up. But I would be careful sitting back and waiting for NVIDIA to fill these gaps, because I don't see NVIDIA unless a company comes out and completely, if they have a competitor that completely puts them out of business or almost out of business. I can't see NVIDIA losing 80% of its value to go back and fill this gap, or 90% of its value, or whatever it is.
Totally agree. I look for sort of a basing type pattern maybe before you get that gap. And I think those are the ones that are least likely to fill. So you can see back in even just that March, May area, it was mostly sideways. And then you got that big gap up. That looked great. And then you had sort of a basing a little bit there between October and November. And then you got that gap up. And so again, when I see sort of a basing pattern before you get those gaps, I think those are less likely to fill and actually provide really good support.
Yeah, and I think too, the level of volume makes a big difference, because it's telling you there's a ton of folks accumulating stock. I mean, you don't have this kind of volume without accumulation taking place. So when the stock keeps going up with that kind of volume, they're going to be buyers. They're going to continue to build positions on any weakness. So it's going to be really difficult for a stock like that to go back and hit those prior gaps, bottom of gaps. So good question, but I would say that all gaps do not have to fill. Martin was on Wednesday, and he talked a little bit about this and said, most gaps will go back and fill. It might be a couple of days. It might be a few weeks. It could be several months, but most of them will go back and fill. And I agree with that, but not all.
No, exactly. He talks about that in his book, Technical Analysis Explained.
Yep. He's got some great books, by the way, no doubt about it. We talked about that, but you can go into the Stock Charts bookstore, store.stockcharts.com. And there on the left-hand side, there'll be some authors, and you can click on Martin. You can see his books there. I would highly recommend his books along with John Murphy's. A couple other quick questions so we can wrap up here. One was, where does the upgrade downgrade info come from? I'm assuming that you're referring to the segment that we do early in the show where we talk about upgrades and downgrades. It comes off of briefing.com. So that's where I go to get that information. There was a specific question asked if I was concerned that we didn't get a sell-off to unwind the overbought oscillators. I think probably that's in reference to the fact that this is typically a pretty bearish week. And I would say, I don't know if concerned is the right word. I mean, we did see some selling earlier in the week. We did hit the rising 20-day moving average on the S&P for the first time in several weeks. So it did some good. Would I have preferred to see a little bit more selling and more basing before the next move up? Absolutely. I feel like you can trust those moves to the upside a lot more when you consolidate and kind of get rid of some of the folks that, were buying at the top. I just think that it's much, you're set up much more stable for a continuing kind of advance to the upside. I think when you just keep going up almost day after day, when you do finally see selling, because there are no basing periods, there's no support areas, it's really difficult to get a bottom sometimes when the VIX starts shooting up. So that's the concern, is that as we keep going higher and breaking out, it's not that we can't go higher. It's just that eventually when we do have selling, it could get kind of scary when we have these almost parabolic type moves to the upside. So that's, the way I would look at that. And then the last question I saw was whether I'd buy Amazon or Google on gaps today. I normally don't buy right after an earnings report comes out. Very rare. As I showed you on IBM earlier today, we were up for a couple of days and then IBM made this swoosh to the downside. I typically give it some time to pull back and just kind of see how the stock trades before I go crazy, and start looking at these stocks right after their earnings report. So I do a lot of research this time of the quarter, and I'd probably do a lot more trading as we get further into the earnings season, and as many of these companies that have reported start to pull back and fill at least maybe to the top of gap support and so forth. So that's the way I look at it.
All right.
So we've got another week ahead now, Erin. And I think for last week, I said we were going to go lower. Did you say neutral or higher?
I said higher.
Okay.
Looks like we're going to split the difference.
Yeah, I think it's going to be probably right in the middle. I mean, I felt pretty good about the call earlier in the week. And I actually thought once we sold off, I thought that maybe it was going to be worse. But we did bounce off of that 25.44 low on the S&P, and we did manage to hold on to the rising 20-day, which I think is always a bullish signal, especially when you're right in the midst of a bull market. So I'm going to say going forward, just kind of jump the gun. I'm going bullish next week.
All right. I'm looking at things. We really do need to consolidate and move sideways, but my indicators are now near where they can turn around. So, honestly, I think I'm going to cop out this week and go neutral, which means neutral, folks, means plus or minus 0.25% on the week. So, so I'm going neutral. You're going to be a bull.
Yep. I'm going to flip. I would have probably stayed bullish this week if I just didn't know as much as I know about the history of the market and the fact that past week and we had moved up so much, and we had just gone through options expiration, and typically the week after options expiration is a down week, especially when the market's moved higher into options expiration. So there were a lot of things that suggested that we would see some selling, and we did see the biggest selling that we had seen in a few months on the S&P to start the week, but can't keep these bulls down right now. The market just keeps bouncing back.
Yeah, and this was our poll from last week. I will have this up so that you guys can fill it in for next week, what's going to go on. And it looks like at this point we had people pretty much higher on the week. And like I said, I think it's going to be mostly unchanged. So there you go.
Yep. All right. Well, that is it. Another wrap for another show, another wrap for another week. Another great week.
Yeah.
I really appreciated having Martin Pring on Wednesday. And just to make a couple of quick announcements, next Wednesday we are going to have another guest. And if you weren't here at the beginning of the show, it's going to be Bruce Frazier. He has a blog here at Stock Charts, and if you follow Bruce, he is a big Wyckoff guy. His blog is Wyckoff Power Charting, so check that out. But he will be on here on Wednesday, and we're having another great discussion, and we'll kind of get his views and what he sees in the market. So looking forward to that. And then next Friday, mark your calendar, I'll be doing a segment on reversing candlesticks. I talked about a couple of those today when I was pulling up the charts, and I talk about them pretty often. But this is going to be a concerted segment just on these reversing candlesticks and how powerful they can be. And if you're a short-term trader and you don't use candlesticks, I think you're in for a real treat. So we'll be looking at that next Friday, probably about a half hour, 40 minutes, something like that. We'll do a segment and get that out there for everybody. So anyhow, thanks everybody for joining us today. As I mentioned at the beginning of the show, please complete the survey as you exit. Bottom right-hand corner of your screen, there will be a segment or a section, how do we do? And you just follow that link. Just one question, just basically how, what do you think we can do to improve? What do you think, of the show and that sort of thing? But we do love to get your feedback, and we do try to use any comments that you have there to kind of use in future shows. So it is really important, and we do like to get your thoughts on that. As a reminder, Market Watchers Live airs on Mondays, Wednesdays, and Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Have a great weekend. We'll be back on Monday. Happy trading.